Here is Martin from Switzerland, from Crypto Valley Association. I'm very happy that you joined to our webinar from Silicon Valley to Crypto Valley to bring these two places together. As I told, I'm the chairman of the investor group from Crypto Valley Association. Crypto Valley Association is the most prominent organization in Switzerland promoting blockchain technology with a long-standing track record with very interesting members from all over the world. We are strongly based here in Switzerland, but we don't have too much of a home bias. It's very important for us to welcome everyone and to bring the brightest minds together for important and interesting projects. I think it's important that our two places, Crypto Valley and Silicon Valley, work closer together. Switzerland has a very mature ecosystem in the blockchain field. It's a strong financial center, multicultural and open place with natural grounds also, where people from and companies from all over the world can meet and can be sure that their interests will be protected. And Silicon Valley, everyone knows Silicon Valley, very experienced investors and a cluster with long-standing tradition in tech and investment field. So I think I'm very happy to have so prominent speakers on the panel today. I'm very happy that Shantanu organized this event together with us, and I'll hand over the mic to him. Please do not forget to come and join CVA if we can be of help for you. If you have any question, please don't hesitate and come back.
Yes, good. Thank you, Martin. Good morning, everybody. This is Shantanu here, Surpure. I'm a corporate lawyer based in Silicon Valley and a member of CVA. We decided to host this event really partly to build the links between Silicon Valley and Crypto Valley. We think there is increasing convergence. These are two very dynamic ecosystems, and there should be more interaction between them. Of course, in Silicon Valley, we have a very large base of venture funds and private equity funds, and of course, many successful startups. Switzerland has a thriving ecosystem, particularly with the Ethereum Foundation, and a very progressive, I think, regulatory environment as well. So it makes a lot of sense to have these two groups of ecosystems interact. And so as part of that, we thought we would hone in on a specific topic, which is institutional investors investing in this space. And there is increasing interest here. I'm just going to quickly just scan out some statistics from a Fidelity survey that actually came out earlier this month. So as many as 36% of institutional investors in the US and Europe own crypto assets, according to the Fidelity study. Bitcoin is the most popular one. And the quote from Fidelity, Tom Jessup, is that these results confirm a trend we are seeing in the market towards greater interest in and acceptance of digital assets as a new investable asset class. So that's from the Fidelity report. That has to be, of course, counteracted with the Goldman Sachs report, which came out from the wealth management group, saying they didn't think Bitcoin was a suitable investment for their clients. So there is some contradiction in the market, but often you see that banks or such institutions, it ends up being they say one thing and do the other. Clearly, JP Morgan is a good example of that, where the chairman said one thing and now they're much more in this space. Anyway, I wanted to talk more about the panel also. We have an amazing panel of folks here from Silicon Valley and and I'm including San Francisco and Silicon Valley, and also from Zug. So we have Matthew Merle, who is with Fifth Era, which is a family office, and he's also with Blockchain Co-Investors, as well as Kairetsu Capital. So doing a number of things in this space and outside this space, in the general tech space. So I'll let each of you give your own introduction, but just at a high level. We have Hunter Horsley, who is CEO and co-founder of Bitwise, which is a leading asset management fund based in San Francisco. and they are doing some interesting projects. Also, we have Jalak Jobanputra, who is venture capitalist and founder of Future Perfect Ventures. And then we also have Martin, who you heard, and sorry, we also have Mathias Ruch, who's from Switzerland and in Zug, and is the founder of CVVC. So with that, I think we can start with each one of you in the questions. Really, the first question I want to ask to the panel is, please describe your business, your venture capital fund, whatever it is that you're doing. Each of one of you are doing different things, and then also, how do these more details about your background that's relevant for this topic. So I think Jalak, if you could go first, and then we'll kind of just move around.
Sure, it's great to be here, Shantanu. Thanks for having me. I'm Jalak Jobanputra, founder of Future Perfect Ventures. I'm going to give a shout out to New York, which is where I'm based. And there's certainly a lot of crypto innovation happening in New York, as well as corners around the world. So we launched the fund in 2014 to focus on decentralized technologies, and blockchain tech has been a core part of our investment thesis, along with artificial intelligence and Internet of Things. And we have over 40 portfolio companies, primarily in equity. And our thesis is really that crypto assets are going to be a significant part of this next wave of technology on a 10x scale of what the internet was.
Okay, fantastic. Who wants to go next? Matthew?
Are you activating the video, or how do we activate?
Yeah, if I can ask one of the kind of the hosts from CVA to do that, Raleigh or there we go.
Well, hello everyone. Hello Jalak. Hello Hunter and Mathias and Shantanu. So I'm based in San Francisco. My name's Matthew Merle. My wife and I have our own family office, as you mentioned, but more importantly, we operate the world's leading blockchain venture fund of funds, and so we are investors in Future Perfect and in another 15 or so of the leading blockchain venture funds, and we also operate a co-investment program. So we're investors in 10 of the 16 blockchain unicorns. Circle, Coinbase, Ripple, and so on. And so this is an area that we're very actively involved in. We're also investors and advisors at Bitwise, and I'm sure looking forward to hearing Hunter speak. And then because of the questions that you circulated before this panel, I thought I'd also mention that in a prior life, I was a senior partner of one of the world's largest consulting firms and specializing in regional economic development and strategy. And so advised Silicon Valley for the last 20 years, and also advised other innovation clusters around the world, including Shanghai and Shenzhen and London, about how to build premier innovation clusters. And I think a number of the questions, Shantanu, that you've circulated really speak to that issue of how do you succeed on a global scale as an innovation cluster. So happy to talk about that too.
Fantastic, I appreciate it. Who wants to go next? Let's go back. Let's go to Switzerland. Matthias?
Yes, thank you, Shantanu. Hello, everybody. Really happy to be on this panel in my home turf, basically. So I'm based out of Zurich, talking to you based out of Zurich. We have our company based at the heart of the crypto valley in Zug, right close to the station. Maybe you know the place. It's called CV Labs. It's a company that we operate as well. So I'm a founder and CEO of CVVC, stands for Crypto Valley Venture Capital. I mean, basically what we invest in is in companies, in startups, early stage, that build products or services based on the technology. So not really base layer protocol, but rather applications, decentralized applications. We strongly believe that, technologies like blockchain are catalyst technologies that, they resonate with this new founder generation that can bring the next wave of tech companies. And we are in the lucky situation that we attract a lot of these young and aspiring founders in the crypto valley. We have two differentiations, as I said. One is we only invest in blockchain companies. That's That's an exclusive thing that we do. And we run our own operational business, which makes us a bit special out there as a VC. So we operate co-working hubs, we organize events, we have an advisory unit. Maybe you know the Top 50 report, the Crypto Valley Top 50 report is something we do. We have co-working hubs in Zug, in Vaduz, and we are opening one in Dubai in October. It had to be postponed due to COVID. So you could say we are a highly specialized tech investor. The investors that back us, they can invest either in equity or in our soon to be launched fund structure. We've done 27 investments the past year. 22 out of these 27 come from our incubation program. So we have an incubation program especially tailored towards the needs of the blockchain space. And then we did some direct investments as well. We have a global deal flow. Only 10% of the startups we screen roughly 2,500 startups per year. Only 10% are actually Swiss. What we're looking into right now, or we are about to launch, that might be of interest to you, is also a bit driven by the current social and environmental challenges that we face. We're launching our fund under the motto T4T, Tech for Tomorrow. We've defined 6 verticals, and that's where we are looking into that's the startups that we're looking into have to be in one of these verticals. I'm happy to tell you more about these verticals.
Okay, that's fantastic. Thank you. And it's interesting because the first 3 that we just spoke to are investors themselves. So now we have Hunter, who is actually on the other side, who is an asset management company as opposed to an investor himself, although his fund is an investor in assets. So Hunter, please come on.
Hello. Hey, everyone.
Hello, Hunter.
Nice to see you, Matthew. Hey, Jalak.
Good to see you.
Hi, Hunter.
Great to see everyone. So shall I introduce myself?
Yeah, please do.
Great, fantastic. I'm the CEO at Bitwise Asset Management. We're based out of San Francisco. We have people in Chicago, Connecticut, and New York, but a US-based firm. 15 people generally with backgrounds in either tech or ETFs, asset management. My background is on the tech side. Prior was a product manager at Facebook. Before that at Instagram. So that's a bit about the firm. Our products, as you mentioned, we manage investment products that help other people put crypto exposures into their portfolios. So we're best known for launching what I believe is the largest index fund in the world back in 2017. We also work with the SEC on a Bitcoin ETF. We've been working on that for a year and a half. It's a never-ending project. And then most recently, we shared that we had begun work to make it possible to buy shares of our index fund through a traditional brokerage account like Schwab or TD Ameritrade or Fidelity or E-Trade. And so we've begun work on that, and the product will at that point function more similarly to GBTC. And we expect that to start trading in the second half of the year. So those are our products. That's a little about the firm, 15 people in San Francisco, and a little bit about me. I'm really excited to be chatting with all you, and so fun to see familiar faces.
Okay, that's fantastic. Thank you, Hunter. So I think we're all here because we think what will take this market to the next level, and Bitcoin has been around for like 11 years now, Bitcoin and the whole blockchain ecosystem. But what will catalyze this to the next level is really institutional investors, which will drive this to the next level. And I think that is what all of us are anticipating, and it hasn't been in a straight line. Certainly, it's been in different fits and starts. But one thing that what I have seen, and I'll use a quote from my favorite book, which is The Sun Also Rises by Ernest Hemingway. And in that book, if any of you have read the book in high school or whatever, one of the characters is going bankrupt, and the main character asks the other character, "How did you go bankrupt?" And he said, "Well, it was gradually and then very suddenly." And so that's how I think a lot of these things happen. It's been gradual, and then suddenly something will happen, and then there will be a big boost to the institutional investor base. And we're all waiting for that suddenly moment, but it will come, and it will come, and we may not even know when it will come, but it will be there. But let's go through some of the other questions that we can get in more into the topic, and maybe you can just maybe continue the same order. And I'll let each panelist talk about what their views are. And I sent around some of these questions, which I'll go through here. So, one of the questions is, how do we define institutional investor to begin with? I mean, there's so many different types of institutional investors. You have hedge funds, VCP funds, you have university endowments, you have family offices, large family offices, mutual funds, banks, etc. Which ones are relevant for your business? And also, I think some of you are also institutional investors yourself. So you may be an institutional investor, but you have institutional investors investing in you. So I'd like each panelist to talk about, how they interact with institutional investors and how they're relevant for your business. So Jalak, if you could please go first.
Sure. So when I launched the fund 7 years ago, I'd say Bitcoin wasn't really that well known. And I was looking and kind of pitching it in context of this wider movement. We had the PC in terms of technology creation that gave rise to companies like Intel and Sun Microsystems and Microsoft, some of which are around, some of which aren't. And then we moved to the internet in the late 90s, early 2000s, which operated on less of a centralized model, more global. And then we're moving towards this next wave of decentralization. So I'd say we were very early in thinking of how blockchain technology and Bitcoin would fit into this next wave of technology development. And so our early investors were really a lot of individuals and family offices and folks that knew that there was something next on the horizon. And I was involved in investing in the early internet, was a TMT banker when the Netscape IPO happened. So it was very much kind of a bet on what's going to happen 10 years out. Now it's a very different story. I think more and more folks have seen that if you just look at Bitcoin, its resilience has really proven out. And we've seen it in COVID. We've seen it in emerging markets for many years, in places like India during demonetization, and Venezuela and Argentina last year in 2019. And so we're really starting to see this wave of interest in at least Bitcoin. And then I think as people start to dig into what's next in terms of technology and what needs to underpin this tech adoption we've seen in COVID. So, all the telemedicine, the data privacy needs, a lot that's bubbling to the surface. We're seeing a lot more interest from more traditional tech investors that understand that blockchain tech is part of this next wave. So we're seeing more pension funds, more, larger institutional non-family offices start to come into the asset class.
Okay, fantastic. Matthew?
Well, Shantanu, I think I'd like to sort of frame this question a little bit. I thought Jalak began a very good answer there, but for me, I differentiate between blockchain, the enabling technology, the crypto monies that it's enabling, both crypto monies and central bank distributed currencies, and then digital assets. And across those three segments, I also think that we need to be clear that there's long-term investors and there's traders and speculators. And so the question of institutional importance varies across that matrix. In blockchain technology and early stage investing, it's driven by angels, family offices, and VCs like Jalak. And we don't really need large institutions to participate. They don't really get involved until the mid to late stage of venture. And right now we're still at the early stages, scaling companies into the mid stage. When I think about cryptocurrencies, from a trading and liquidity point of view, we really do need institutional investors, and they're beginning to put a toe in the water. Long-term investors, hodlers, if you will, of Bitcoin, there are institutions beginning to reach into the space as well. Now, digital assets, which is where Zurich is one of the global leaders, digital assets, again, we need institutional presence. And there, in Switzerland, SIX and SDX, Sabre, Signum, you're beginning to ramp up the infrastructure. And once the infrastructure is in place, the institutional investors can play. But I wanted to lay that framework because institutional importance varies across that matrix. And I think that in early stage venture investing, it's not particularly relevant right now. And if your audience, I'm not sure who the Crypto Valley audience is today, if it's primarily entrepreneurs, you can get all the funding you need without talking to a big institutional investor. Conversely, if the audience here are investors, then it's a whole different conversation.
Thank you. I would ask you, Matthew, just about that. A16Z, Anderson Horowitz has set up a $500 million crypto-focused venture fund. So I think some of them, you can comment on this, are dipping their toe in the water. It remains to be seen whether some of the traditional Valley VC funds will spin out a very focused fund focused on this space. So I don't know if you have a view on that. Well,
that's sort of a point question, but I would say we have a database of about 600 funds that are focused on blockchain and the technologies that surround blockchain. Of those 600, about 450 are crypto hedge funds, which means that they are permuting and combining and trading cryptocurrencies. They're not venture investors. Only about 100 funds are venture investors. Jalak is a great example of that and leads one of the better ones in that space. And of those 100, most of them are pure play blockchain venture firms. The general purpose firms, and you mentioned one, Andreessen, but we could also talk about Sequoia, Union Square Ventures, Draper, and RRE Ventures as being 5 of the leading general purpose funds. They are leaning into blockchain, but it's a tiny allocation in their general purpose fund, probably less than 5%. And the exception is Andreessen. Andreessen has created a dedicated vehicle, 500 million in the most recent closing. And that speaks to Mark Andreessen. Mark was part of the Mosaic team. He launched Netscape, and he really opened the internet that we use today. And Mark Andreessen says, if I had understood the blockchain concept and protocol at the time that I'd written and worked on Netscape, I would have embedded it into Netscape. But I didn't appreciate that something like this could be possible. And so here we are with an internet that has no identity and no security embedded in it. And we're having to, re-engineer the internet with identity, security, and distributed computing and capability. And that's really why blockchain matters.
Okay, great. That's very helpful. Thank you. Mathias?
Well, I think that was a very important and very precise distinction between the two universes that actually exist here, right? And as we are focusing on the venture, the early stage venture universe, it is way too early that the big institutional investors would come in this early, just from our perspective. And how we currently see it. Maybe for the audience, and I'm sure not everybody's an investor in the audience, because your question was also towards what is an institutional investor. You could say it is a company that invests money on behalf of other people, right? But what you actually mean is those really large organizations that have cash that needs to be invested from a business perspective. They need to allocate the money, right? So there is this these are large corporations, large organizations, banks, trusts, funds, pension funds. This is probably the typical institutional investor that everybody has in mind. And well, at least what we see here in Europe and Switzerland, there is no pension fund that would go into a blockchain tech right now. At least I would know of them, right? And if you interestingly enough, when we started early days, back in the early days, so we've started CVVC in 2016 already, where the early adopters, or those that wanted to understand what's happening in Crypto Valley, came mostly from Asia. Large Asian insurance companies wanted to back almost everything there was around at the beginning. So you had large institutionals in the very beginning, and after crypto winter, almost all of them, vanished from or weren't there anymore. And if you look at the investors that invest in us or with us currently, these are mostly private individuals, high net worth, Swiss-based, also non-Swiss based. We do have some early adopting family offices. We do have some early adopting asset managers, even VCs, you know. If you look at their motivation, that would be to, how can I tap into one of those leading ecosystems that is not my ecosystem, right? So how can I tap into the crypto valley ecosystem, which is a global ecosystem, but might have something that I don't have where I am, or they have access to infrastructure that is not currently where it should be in my location. Matthew was talking about the regulatory environment in Switzerland, which indeed will be even more advanced by the beginning of next year, when the new legislation will be in place. And these are factors that bring, I would say, these are early adopting organizations or people to Switzerland or to the crypto valley ecosystem. And eventually, with the digitization of the asset space, also the institutional investors. That's why it's so important that we get this infrastructure done, that we get this in a sufficient level done. That is very important. You know, Switzerland and Swiss people are not really born to think big, and here you have to absolutely think big, right? And that's probably also a challenge in mentality in Switzerland. Maybe what I can add, what is interesting in Switzerland, there is probably, we were hoping, or we were anticipating that more corporate investors would join the space early because of the tech and because of the, I would say, potential innovation that you could get very early on, that you could take a sneak peek if you want. That would join early on, and that wasn't the case in our case, at least, at all.
Okay, that's very helpful, Mathias. I would note one data point as I was researching for this topic. I did find one instance of an institutional or a pension fund investing in this space, and that was in Virginia, the Fairfax County. I don't know the exact entity, but
the police pension.
Sorry, so
is the police pension in Fairfax County?
Police, yeah. So forward-thinking police pension of Fairfax County did invest in the space, and literally they're much bigger pension type funds in the U.S. and elsewhere. But let's see if it does start a trend. The other point, Mathias, is that I did see that UBS has also started a fintech-focused venture fund. I don't know if that specifically includes Bitcoin, blockchain, etc. But there is some corporate VC element that's starting to develop in Switzerland itself. No,
of course, but I mean, fintech is a different area. Then, you know, that's been around for a couple of years, and there's been a very active fintech scene here in Switzerland also. And you have lots of accelerators. You have corporates that tap into the space. You have money that goes into the space, of course. But if you're talking specific blockchain, you know, these really very new technologies that haven't been around for a couple of years, or the use cases that you can really come up with new products such as digital assets, that's not yet there, in my opinion.
I'm just going to jump in there. In the US, we actually saw corporates start to invest in the sector in venture rounds, and I'd say, you know, Series A and later, not necessarily at the seed. We saw them come in before a lot of other VCs did. So companies like American Express, Visa, JP Morgan were investing in rounds, you know, before a lot of the brand name Silicon Valley VC funds. So we did see early on a lot of corporate interest, especially in some of the underlying technology. So I do think the US is a little bit different on that angle. And you certainly see companies like Visa where it was, you know, they weren't sure how competitive this was going to be. They wanted to invest just to learn about the technology, and they're actually, getting more and more active in the sector. So I do think that corporates are getting even more engaged and have been, at least in the US, for a number of years.
Great.
If I could build on that, Jalak, I would also say that, again, a bit of a framework. If we think about foundational technology, transactional technology, and then applications, we think of it as a stack. Blockchain is a horizontal technology at the foundational layer, but the people that are most engaged down at that level tend to be tech companies. And so whether it be IBM or Microsoft or Amazon, they're very involved in exploring this new area of technology. Now, at the transactional layer, the world operates a global economy, and the people that make all of the payments and transactions and investments occur are financial institutions. And every financial institution in the world, including Credit Suisse and Union Bank of, UBS and, as I say, 6SDX, all of them are very actively looking into this space and the applications of digital monies and digital assets. What the issue is that the top layer, the application layer for blockchain, has lagged. There were a lot of promises made about how we'd roll out blockchain-based technologies at the application layer, and in fact, it's moving pretty slowly. And so all the other industries of the world are sort of watching, some of them are engaging, but it's still more at the prototype level. What's interesting to me about Switzerland is there's 3 industries where the Swiss are global leaders, right? One of them is in finance, investing, and asset management. And so you are right in the middle of the leading edge of digital asset applications in Zurich and Geneva. The second is healthcare. And that's more of a Basel conversation, but absolutely the AstraZenecas and the Novartises and the Roches and so on are looking very closely at the application of distributed ledger to the global health industry. And then the third, which tends to be overlooked, is that you are also a center for global organizations, including in the sports industry. And so you have the Olympic movement, the soccer movement. You have many of the world's most important sporting organizations based in your cities. And I do think that that is a very interesting thing, because we're beginning to think about how do we securitize and turn into assets the contracts and the revenue streams of the world's leading personalities, sports people, musicians, actors and actresses. And I think that that's a possibility for you too. I think that in Switzerland, you could certainly lead a global movement to securitize the revenue streams of the world's sports people. And you have the organizations in your cities to really take a lead in that regard. So I think that's a third very interesting one.
Great. The next question is on ecosystems, so we can touch more on that in the next question. But Hunter, just on the institutional investor side, because you're clearly, and you're becoming an institution yourself, and you also have institutions as your LPs.
Yes, I mean, I think all of the views that Jalak and Matthew and Mathias shared are right on. I think that they're, depending on the type of institution, they're at a different stage of coming into the space. So the ones that are here in a pretty meaningful way, in the US at least, are family offices and endowments, and certainly self-directed high net worth individuals, which I wouldn't think of as an institution. I think that the ones that are coming in now, so we're not here before, but are coming in now and will be the next sort of institutional constituent that you see infrastructure built around, that you see people start to write about, and so on and so forth, are hedge funds and independent financial advisors, or RIAs. And those are starting to come in meaningful volume. And there was a very public example, which is Paul Tudor Jones in May. Last year, Rick Edelman's speaking about crypto, and we primarily serve RIAs, financial advisors. So we do about 2,000 phone calls a month with financial advisors, and can tell you that they weren't in before and they're coming in now. So families, endowments are firmly here. I would say that the majority, the better half of the top 20 endowments already have exposure through a venture fund. hedge funds coming in through futures, trading desks, in some cases products like ours in GBTC, RIAs. And then I think later what we'll see is, and you know, I think this is similar to what everyone has said. We've seen the first pension, that was the Fairfax County Police pension, investing in Morgan Creek Digital's fund. You've seen Temasek get involved with Libra. You've seen certain foundations come in, but very, you know, one or two. And I think the institutions that will come later are foundations, pensions, sovereign wealth funds in meaningful size, banks, mutual funds. So depending on the institution, if you disaggregate it and pull it apart, they're in, you know, different stages of coming in. I think the most, you know, in a way, the most interesting is who's coming in now that wasn't in before. So we know pensions aren't here for this moment. And we know, you know, I think all of us on this video know that endowments and families have pretty much arrived. I think that the new people stepping into the market are those hedge funds and financial advisors. And so I think that's very interesting. We write a letter every month to clients and investors. There are a few thousand readers. It's available on our website, bitwiseinvestments.com. But I believe 2 months ago, we wrote about what we called the 4 eras of crypto. And maybe that was a subtle influence that Matthew and the 5th Era Family Office had on our thinking to call it the 4 eras. But we talked about the 4 eras and how, you know, 2010 to 12 was one era where the constituents were mostly programmers and hackers and people toying around with things. And then 12 to 15, you saw retail come in and high net worth individuals, and you had a certain set of infrastructure to support them. And we would argue 15 to 18 or so was families, you know, which can be pseudo institutions in some cases, venture funds springing up to pull in endowment money, and that crop of infrastructure, Coinbase, Square, Robinhood, CME, and then I think the period that we have today, which we call the next era, or the 4th era, is these hedge funds and RIAs coming in. Infrastructure coming from a new set of people like Fidelity and others. So I think there have been different stages. Each of those stages generally comes with a little bubble in price action where you set a new all-time high and you have a higher low at the end of it, and that drags in some new infrastructure and then some new investors. And so those are some thoughts on how we view it. Not necessarily different from what's already been said. But that's my vantage point. And again, for Bitwise, we create investment products that help investors put digital asset exposure in their portfolio, which is a bit different than of course venture investing. So we spend a lot of time on client service and sales conversations and research conversations with investment committees, et cetera. So that's our vantage point.
Okay, thank you. I guess as part of that, it was still of the gradually then suddenly moment. We're still in the gradually period, and again, we talked about, you know, there'll be a time when it's suddenly. Just one quick housekeeping item. You know, I know some of the panelists actually have to leave because they have another event to attend. If people do have questions, please post them on the Q&A section in the chat, and then we will go through them, and perhaps if we have time, some of them can ask the questions live as well. But I want to make sure that people know that we intend to have an audience Q&A session. But in order for that to happen, you know, people should write in the Q&A section of the webinar. So it should be at the bottom of the screen, and then we'll monitor those and then ask the audience, ask the panelists the questions. But getting back to the discussion and the list of questions I had, one of the things we did touch upon is the ecosystem that and how that drives institutional investors. And I want a little, and we, you know, Matthew did talk a little bit about that, and others have spoken about it. But we can talk about how the ecosystem that you're located in helps or hurts in some way the drive towards institutional investors. And I can just speak about the U.S. vantage point. You know, certainly I think, you know, the U.S. has not been all in on this space for sure. I mean, there was most recently a case on Telegram where basically Telegram essentially you know, refunded all their money to U.S. investors. That there was an injunction from a New York federal court on Telegram, and so there have been many court challenges in this space. The SEC commissioner, from the news reports, is apparently leaving, And so it remains to be seen what the new commissioner of the SEC will have on it. Sorry, the SEC chairman will have on this space. There's one SEC senior person who's Hester Peirce, who's very has taken a very I think accommodating view towards crypto. It remains to be seen if she retires, which I think is imminent, who the next person will be. And so there is some movement in this space and the ecosystem generally around that. And there are also regional differences. Silicon Valley is not necessarily a money center in the same way that New York, London, or Zurich are. And so there are regional differences as well. I know we titled the title of this webinar, Silicon Valley to Crypto Valley. Inadvertently, sorry, Jalak, we made New York flyover country, which I don't think most people typically attribute New York to, but just in the Silicon Valley to Crypto Valley conversation. But clearly, New York is a major global financial center, frankly, probably much more so than San Francisco. But so how does the ecosystem you're in, drive institutional investors and just generally around the US, in New York, and each of you are in your own ecosystem? So Jalak, if you could please comment. Thank you.
Sure. And I won't hold it against you. I prefer to be underestimated. So look, I think mentioned I started investing in the space in 2013 and 14, and frankly, a lot of activity was happening in New York, and certainly Ethereum was founded in Switzerland. And what was exciting about the sector was it was really truly global in nature and open source, and it kind of spoke to not one geography, but truly being decentralized. And since then, we've certainly seen different centers, and I'd say San Francisco is really emerged strongly in a way that in the early days I would say it was less so. New York has had its unique challenges with the Bit license, some more stringent regulation. They're really one of the first to regulate the sector through the Bit license. But if you look at recent Department of Financial Services action, and they brought in a lot of innovative folks who come from the tech sector. They realize that they do have a desire to foster innovation, but also protect consumer interests. I mean, what we saw in 2017 was really completely not paying attention to what regulations existed, right, with the ICOs, and we saw a hangover from that. And we're still seeing actions like the Telegram action that you just mentioned. There have been a number of other class action lawsuits that have been kind of settled. That really made institutional investors very wary of the sector. Now, there were a lot of speculators that wanted the yield and the return in a very low yield environment in other asset classes. But we're now seeing, I think the more clarity is going to lead to more institutional investment coming in, and we've seen movements towards that, and it may drive out some of the arbitrage opportunities and the speculators, but it will bring in, I think, larger amounts of capital and create a more stable capital base in the sector.
Okay, great. Matthew?
Well, Shantanu, I feel like I should take exception to the notion that Silicon Valley isn't the global leader in large portions of the financial industry. We have digitized the world, and that means the most valuable companies in the world are all West Coast-based companies. Apple, Amazon, Microsoft.
I meant to say it's not a money center.
No, but this is important because the payment systems and the transaction systems that support global internet activity are here. And as a result, PayPal is here. It's not just PayPal, it's Coinbase, it's Ripple, it's Facebook, it's Uphold. It's all of these technology-enabled payment players are in Silicon Valley. Now, New York is without question a global financial hub, but it's very different. And so you have more corporate finance, you have the exchanges, you have the corporate fundraising activities and the investment bankers, and some of those need to be technology enabled, and you obviously have the trading ecosystem around that. I'm also vice chairman of SFOX, which is the leading crypto prime dealer, and without question, when we think about liquidity and trading in public equities and fixed income, that's where New York, London, Tokyo really play. When it comes to Zurich, Zurich is one of the 3 global leaders in asset and wealth management. And as a result, it has this unique place in the global ecosystem and a huge opportunity. And I've already said this, but I'll repeat it again. As the ecosystem in the ecosystems in Zurich and in Geneva and in Switzerland, where blockchain is going to be important, first, it's global wealth management. And the opportunity to embrace digital assets and the digitization of every financial instrument is going to happen in your backyard. It's going to happen in Zurich. And so if I was an entrepreneur right now and I understood blockchain and distributed ledger and I lived in Zug, Zurich, or Geneva, I would be thinking about how to interact with the leaders in the space. Julius Baer, Sabre, Signum, Murky Baumann. These are the people that you should be getting close to, and Mathias and his incubator can help, I'm sure. And then the other one, of course, is healthcare. So the reason I'm emphasizing this point is that if you're an entrepreneur and you have deep technology skills, if you live in an ecosystem which is a world leader, that is your easiest path to getting launched. And it doesn't mean you can't pick something else. You know, you can say, I'm living in Zurich, but I'm going to focus on blockchain enabling the global transistor and capacitor industry. Well, the problem is you're not in Shenzhen. And if that's what you want to focus on, you need to get on a plane and go to Shenzhen, because Shenzhen monopolizes electronic components globally. So it's very hard to succeed in Zug if that's going to be your use case. But the great news about Switzerland is you have 2 or 3 of the global leading industries based within a handful of miles. And that's where you should be looking for your use cases, in my opinion.
Okay, fantastic. Mathias?
The first time someone else took over my job when it comes to Crypto Valley in Switzerland. So thank you for that, Matthew. At least it shows that you know the PR and marketing department of Switzerland does a good job. So that is really, thank you for that. So where do I take it from here? I mean, if you look what happened, and I would agree with Jalak when it comes to that ICO craze thing, which is some sort of a variable that doesn't really fit in what's happening now when it comes to professionalizing the space, is you first had the exceptional talent and the exceptional projects that came with these people. It started with Ethereum, it started with the people around Ethereum. In Switzerland, Bitcoin Swiss was super early when it comes to fiat in, crypto out, the brokering, the trading aspects, one of the leading companies nowadays as well. Others came, and you know what happens if you have talent and if you have the projects, normally capital follows, right? And this happened big time through the ICOs, a bit less through traditional fundraising, I have to say. I mean, it took the, let's call it the Swiss venture ecosystem some time until they realized what's really actually happening there, which was, of course, an opportunity for us. But I would like to have more players and more money in the system, I can tell you that. What you then need is an infrastructure that is able to cater to the needs of these projects, right? I mean, what you get when you come here to Switzerland is you get instant access to hundreds of people that are developing towards the exact same vision that you might have in your very specific sector that you are active, right? And they face the same challenges. They have the same needs. They probably know how to tackle the legal or regulatory side of things, and they can direct you to people who can help you. This is the big advantage of Crypto Valley today. You have 3, even 4 years of experience and expertise that you probably don't get anywhere else on the planet in this really small location in Switzerland. You can go anywhere by train in I would say 2 hours, right? And so you get both the access to the specialists, to the service providers, and you have the access to the industry sectors that Matthew just mentioned. You can go to the banks, you can go to the health sector companies, and you can talk to the regulators. in Zug, if you want to talk to someone who is dealing with, the tax level, VAT, and you have a token model, you can call them and they will sit down with you and you can figure things out, sort things out. I think that is the true value of an ecosystem like the crypto valley is. Now, what's happening here is people are anticipating the I would say the regulatory leapfrog that is going to come through the new legislation, right? So Switzerland is going to make changes to the current law in 3 areas. It's the private law, where they're going to introduce the token without mentioning the word token. It's a very interesting Swiss word called Registerwertrecht. I'm not going to translate that to English, but it's working because you can then just rely on the existing civil code and all the different legislation that you have. The second part is the bankruptcy law. Very, very important to be able to segregate the assets when it comes to bankruptcy, a big issue for custodians and the like. And the third aspect is they are going to introduce a new license for exchanges, especially for decentralized exchanges, peer-to-peer exchanges. So that's going to bring the whole ecosystem to a next level, and people are building towards that. People are building towards that revolution that is being anticipated and expected when it comes to digital assets and marketplaces for these digital assets, which is a huge opportunity for Switzerland. And it is an opportunity for entrepreneurs that want to embrace these opportunities and that want to, that come here and take advantage of the existing ecosystem.
That's fantastic. Sounds very exciting. I mean, we won't have time to get into some of the questions, but some of the other things that I had highlighted to talk about are what are the challenges in developing, growing institutional investors in this space, and some of them are what Mathias talked about. It's the ecosystem needs to be there. There needs to be proper regulatory environment. There are issues around custody, issues around insurance, perception and reputation of this space. So these are all separate, but also part of what become an ecosystem. And I think Hunter, you also have a product. So some of these things around custody and insurance probably directly impact you. So maybe you could talk about the ecosystem and also kind of a bit about these challenges also.
Sure. Yeah. So you asked how does it vary city to city? I think it varies quite a lot. So our vantage point is mostly in the US, but I would say an institutional allocator in New York, just to give you a microcosm, an example, is more excited if you're custodying with Fidelity Digital Assets. An institutional allocator in San Francisco is more excited if you're custodying with Coinbase Custody Trust Company. That's because in San Francisco, they find trust in technologists and software, and don't require 100-year track records to believe in the strength and the merits of an institution, and that's been proven out in the startup ecosystem there. And obviously, in a place like Boston, in New England, in New York, there's a lot of trust that's placed on having very large balance sheets, on having 100 years of operating records. So even just in the small microcosm of we work with Fidelity as the custodian that holds the digital assets for one of our funds. Coinbase Custody Trust Company holds the assets for the others. They both have great solutions. They both have insurance policies. They both have professional teams. But you see different preferences. And so I think, when I think about San Francisco and the Bay Area and Silicon Valley versus New York, I see different audiences, different people that are thought leaders, and then different preferences around infrastructure. So I think it's quite a bit different between the two cities. And I think Matthew also mentioned, there are these giant tech companies that are sort of the leaders in San Francisco, and they've been very forthcoming in embracing the asset class. And I think that's created a lot of enthusiasm in San Francisco. So you have PayPal, you have Square, you have Facebook, obviously. You have Robinhood. Coinbase itself has become an $8 billion company to be reckoned with. And so you have these technology companies and Microsoft in different ways taking it very seriously in San Francisco, and correspondingly you have the venture community taking it very seriously in San Francisco. And I think that's sort of the locus in San Francisco. I think in New York, people are more trained on CME and Fidelity, and JP Morgan's recent change in its tune, and what Goldman is writing, and you know, are looking more at the hedge funds, and we're really influenced by seeing the news of Paul Tudor Jones. I think on the East Coast we see a lot more attention placed on regulation. Shantanu, you mentioned the SEC Commission and changes there, so I think that is definitely something that comes up more in conversations on the East Coast. So I guess to summarize, you know, I do think that institutions in general are not a homogeneous set. We talked earlier about family offices versus endowments versus pensions versus RAs versus hedge funds. Very different audiences who care about very different things and use different infrastructure. I think it also pulls apart depending on where you are. And even within the US, I think New York versus San Francisco, there are different points of reference and different communities. So that, at least that's what we experience in conversations with these types of firms.
Okay, that's fantastic. CJ, if I can ask, how are we doing on time? I know we're running into close to the end of the hour. Do we have any time for audience Q&A, or should I just read out one or two questions? Maybe that's the best way. Jerome?
I know I have a little more time, so I don't have to rush. I actually thought this was 90 minutes, but...
Yeah, I think some of the other folks, Mathias, I think you needed to leave, and I know Jalak and Hunter have something. So if you guys can stick around, that's perfect. If not, I understand if you need to leave. But we can continue. Let me ask one of the audience Q&A questions, actually. So let's just flip to that, and then we'll continue with the discussions, the questions I had. One of the questions, and I think there were some questions that I think people left, so those questions have faded out. But one of the questions I thought was interesting from Angelica here, if you're able to ask live, CVA, are you able to ask?
Yeah, we'll try to.
Shantanu, I think I answered the questions, the 7, so that's why they moved over to the answered
Oh, I see. Okay, got
bucket.
it.
But you can still ask them again.
Well, there was one. There was one here from Angelica, and Jerome. I don't know if you want to bring her in.
Yeah, Angelica.
Yes. Hello. So you were talking about the next level of Bitcoin, and I wonder how would that show up, and what would it be exactly? To be a bit more specific, what would be the next level of Bitcoin as you talked about it? I think it was Mathieu. Was it you?
Okay,
No?
I don't know if that's about backed or what exactly that's about. Maybe the panelists could see what about this.
I think the question is, what does she mean by level? Because you need a dimension. So at one level, the next level of Bitcoin has to be central bank distributed currencies, which is taking fiat currencies and turning them into digitally native monies. And that is upon us now. You know, China launches any day, at least some version of a digital yuan. We know that the US Treasury, the Bank of England, the EU monetary authorities, everyone is working on their own central bank distributed currencies. So that's one way of answering the question. Another way is, you know, what's the next level of a sovereignless, distributed, independent way of transacting value? And I'm not sure there needs to be a next level beyond Bitcoin. Bitcoin needs to evolve and get better, would be my view. I'm not a Bitcoin maximalist, but I think Bitcoin's pretty good. And it just needs to get better, faster, more throughput, lower transactional costs, and they're working on these things. But you know, I'll leave it at that. I mean, we need to define the dimension of the next level would be the point. But Jalak, Hunter, Mathias, you know, over to you.
Anyone else from the panel? You want to answer that question?
So.
Yes. So from my perspective, you know, as Matthew said, you could interpret next level in multiple ways. I think that one very common viewpoint is just new all-time highs in price for digital assets and for Bitcoin, and we have a Bitwise 10 crypto index of the top 10, and you know, when will we see new highs? I think, as you know, as I mentioned, we wrote this piece about the different eras. I think we're at the beginning of a new era that will set a new all-time high, and I think it'll come on the backs of So we all understand Bitcoin digital assets have a scarce supply, and so the price fluctuates with demand. And then you have to answer the question, where will demand come from? Demand can come from utilization, using it for a use case to remit money, to store money offshore, to et cetera. And demand can also come from investment and using digital assets in portfolios. I think historically, investment speculation using digital assets in portfolios has been the source of the largest amount of flows. And I think that the new flows that will open up and push crypto to new all-time highs will be coming from the financial advisor and hedge fund audience. And I think that the doors that need to be opened, or the barriers that need to be surmounted, are happening now. But they're things like public, well-respected first movers, the relevant pieces of infrastructure. I mean, CME futures needed to exist and have reasonable volume, and people need to have open accounts for a lot of hedge funds to participate in the space. And so that piece of infrastructure had to be there. I think for advisors, they need funds like ours, and they need sales support like our organization provides. And so I think those two audiences will provide the main source of new inflows that can create the demand that will move prices higher. And I think that's sort of afoot. And I think that those are the catalysts that will drive it.
Okay, great.
So,
Martin, you want to say something?
yeah, I just want to say, I think we are probably soon closing our webinar. I am very happy that you all made it today. I think it's a great thing to do such a webinar, because it's quite easy for all of us, and we are like a worldwide community sitting all over the planet. We have participants from more than 40 countries now taking part in this webinar, and that's just a great thing. And I think we will really work also on this format in the future, because it's so great to have so fabulous panelists as you are. I think it's now really decentralized. It's a global movement, and we had lots of learning today. I liked it a lot. I think we all, and especially you, we got lots of true and honest insight. You explained us what you really think, and it was not just like some sales pitch, but it was an interesting analysis. That's why I thank you very much, Matthew, Hunter, Jalak, and Mathias, to be part here. I hope that we can do something similar very soon, because I have learned a lot, and I think all the audience has learned a lot. What my first or most important learning here from this webinar was that we, from the experience from our US-based friends, I think you see there is another mentality. There is maybe more openness and more readiness to invest in this space. I think that's the strength of your country, and that's probably also why Silicon Valley and the US became so important the last few decades, and had now built this huge company who basically dominate the world. On the other hand, I think we here in Switzerland, with the experience we have a great legal framework, very open, very welcoming people from all over the world. And it's not for nothing that most of the big companies, Matthew, you just mentioned them before. We have a Nestle, we have a Roche, we have a ABB, etc. Very often it was foreigners choosing Switzerland for their company and conquering the world with that. And I mean, I don't want to do now, it's not about the country dropping now, but I think we should really work together to bring our projects forward. And I hope that we can meet very soon, and also not just talk, but really do interesting business together. Thank you very much again for being here with us and sharing your insights.
Okay.
Thank you.
Thank you.
Great. Thank you, everyone.
Thank you, everybody.
Thank you.
All right.
Thank you.
all.